excited here. So let's see. I want to check and make sure the stream health goes on all right before we get moving here. It seems like everything is good over there. Cool. So, hey everybody, welcome back. This is the second stream of this week, which is definitely a little crazy for me, but I'm super excited today to have Zach of TokenTax.co on the channel. It is tax season. I know there's a lot of questions, so we're going to go over some stuff. If you guys have any questions for Zach in the process, please leave them in the comments and we will get to them. Today we're going to tackle some of these unknowns, and I want to welcome Zach to the channel and thank you for joining us.
Oh, thank you so much for having me. I know people are getting stressed about crypto taxes, so hopefully get your listeners and viewers some useful information to help them get ahead of it this year.
Yeah, I mean,
last year was quite a mess for everyone.
It was, and I've seen a lot of comments and questions on Reddit, on Twitter, on all sorts of stuff. So this should be interesting. I just want to quickly mention this is not a sponsored video, but Zach did give me access to the tax platform for personal use. So basically, a trade-off. I wanted to actually use the platform, and it is a good platform, which is why I decided to do this video. So cool. Anyway, so let's get started with something easy, which is, what is your platform? What are some of the features, and who do you service?
Yeah, so the platform is TokenTax. My co-founder and I, Alex, he's a software engineer designer. I'm accounting, finance side. We launched it together. It won the Product Hunt Global Hackathon in 2017. And out of like 1,000 submissions. And basically the whole idea was there are crypto tracking platforms out there that have a lot of problems getting data incorrectly. You know, if you have one missing cost basis, that can cost you thousands of dollars, or one price wrong. And, so basically our idea was, let's not reinvent the wheel. Let's just build a platform that imports directly from wherever, imports data from the exchanges, but makes it in a really impossible to mess up way where you just upload everything. And then I have a team of people who are Excel wizards, data wizards, crypto tax specialists, crypto CPAs, checking all the uploads, fixing any data formatting. Now we import directly from 100 different exchanges, but basically you upload all your data and it creates your tax forms. And for 95% of people, most of our customers are just individual tax filers who have, they trade on 3 or 4 exchanges. You download your forms, import to TurboTax, or hand it over to your CPA. We make it in whatever format people need. And then we also do more complicated things, like if you mine crypto, if you get paid in crypto, if you spend crypto, if you need to file an FBAR, which means you had over $10,000 on a foreign exchange like Binance, Bitstamp, we create that. It's all included in the platform. And then last year we just did the crypto part of a tax return, but we realized so many of our customers, 99% of the complexity is the crypto part. And they just need to add a W-2. And then we had to teach their CPA how to do it. They've had to basically pay twice. So we acquired crypto CPAs. So now we have CPAs in-house and we file taxes for people. And we file taxes for businesses, S-Corps, LLCs, C-Corps, crypto hedge funds, crypto investment vehicles where you need to issue K-1s. We're basically an accounting firm that specializes in crypto now. And, we're the only accounting software platform that has real accountants checking your work, answering your questions on intercom, and basically, professional tax professionals doing crypto and a software platform just to make it affordable.
That's awesome. I mean, it's totally such a niche market that was seriously needed. I mean, I know in doing my taxes, I claimed basically what I took out from Coinbase because I didn't know how else to claim anything. And I hope the SEC or the IRS doesn't see this now and come get me. But it's true. I mean, it's difficult. I understand some of the complexities of it, but not all. And then it's like, are you doing it right? Is it wrong? Is it going to set off a red flag? So I assume you have a background in this stuff.
Yeah. And I mean, just to touch on one thing you said, Coinbase, it's like a lot of people have only Coinbase, and you'd think, they're the gold standard exchange. Even their tax reports are, they're saying things are taxable events that aren't, like, even just undoing the Coinbase reports is like a full-time job for us. Originally, we launched a basic product for just Coinbase and Coinbase Pro, or GDAX. And we thought, oh, they'll figure out the tax forms before tax season and we'll just give that away for free. And here we are 18 months later, and still the tax reports they're putting the burden on the users to prove things are not taxable events that actually are. Like a withdrawal isn't a taxable event unless you spent the money. But, digressing from there, yeah, I do have a background in this, and I got into crypto tax because I was really into crypto, trying to figure out how I could be useful as a finance accounting person. And, people who had made a lot of money in crypto were like, hey, Zach, I know you're kind of tax wizard. You're really good at this personal finance stuff. Can you help me harvest losses in my stocks, or figure out, like, can I sell this apartment, or help me figure out, I have all these short-term capital gains from trading crypto to crypto. The price is rocketed up. Please help me figure this out. And it was kind of like, it was a really fun puzzle, but it was just helping really wealthy people save a little bit of their money. And kind of the whole reason I didn't go into tax in the first place, even though I had a degree in accounting and everything, is because of that. And then I met my co-founder, Alex, who was building a platform that did FIFO accounting and connected to Coinbase just for his own taxes. And I was like, Alex, we could do this way bigger. Let's help people track specific shares accounting, take into account their long-term and short-term marginal tax rates. Let's teach people about tax loss harvesting. Let's democratize access to these tools. Like, this is how I trade my own stocks. This is how hedge funds do it. And family offices, really wealthy people, they all have an accountant who does this for them. And to me, I just wanted to show everyone in the community how to do that. And, to give you a quick 30-second overview of my background, I did investment banking for a couple of years. And while I was doing that, I did a volunteer program where I taught personal finance at an inner city high school. And I kind of loved that. And I basically said, hey, I'm going to take a break from the corporate world, and went and did Teach for America for 3 years and taught math to middle schoolers and high schoolers, and made it about money and entrepreneurship. And in the summers, I kept working with connections from JP Morgan in the business world, but with nonprofits over in Africa and, in Zimbabwe, Zambia, Madagascar. And I saw over there, like, the value of crypto. When people are using tattered old dollar bills because their currency is so useless, you realize, like, Bitcoin has a ton of potential. And back then it was only Bitcoin that was around. And so that's how I started learning about crypto, started working in impact investing. So investing in companies that did good and made money. That's what I was doing over in Africa, was helping nonprofits find ways to make money to be self-sustaining. So I was trying to find a way to get into crypto. And like I said, taxes became a really important thing. And we launched TokenTax. Now we've got, 5,800 users and counting every day. So we're just trying to make a useful tool for the community.
Well, you certainly have the experience backing you to make a useful tool. And I mean, I can say I haven't used the platform a ton yet because I had already done my taxes, unfortunately, but I did mess around with it, and it is extremely user-friendly. So as far as UI goes, you guys have done a good job on that respect for sure.
Thank you. Yeah, I got to give a hat tip to my co-founder on that one. But yeah, we're there on, I'm not known for my design aesthetic, but yeah, we're there on Intercom answering your question. Forks should be treated like this. Airdrops. Oh, what about this token I bought that I haven't received yet? Or what about this margin trade? Or what does this mean? And, that's what really differentiates us, is like, we're there holding your hand through the process and helping you actually file your returns for you, because, it's a big learning curve to teach your CPA how to use the forms you created, unless you're like a CPA or an accountant and an Excel wizard. And I was using the other platforms. It was so hard for me to get the data in right. I was like, there's almost no chance that someone who doesn't have years of investment of, like Excel modeling experience is going to be able to do this right. So that's why we just wanted to make something that was really hard to mess up in TokenTax, and just focus on tax, now we added tax loss harvesting. We don't have a ton of tracking tools, but we're slowly adding functionality as people want it. Just whatever is useful for our customers. And now we serve hedge funds, we serve businesses, because our first customers, a lot of them worked at crypto hedge funds or worked at a startup, and they're like, hey, my wallet could actually use this or whatever. And so we've added enterprise customers. Cool. Briar Capital was one of our first ones. And yeah, those guys have been amazing, just showing us what tools they needed, being patient. So as we built tools for hedge funds, and then we're able to sell it to other hedge funds in the space and be a best-in-class tracking tool for them.
Well, it's a good goal. So as far as usability goes, what exchanges are you compatible with right now?
Literally every exchange that has a CSV export or API export, we integrate with. And, as new exchanges come on, or someone says, hey, I traded on this whatever exchange, we'll have, and here they upload the CSV, we'll have our engineers add it that day, so that we support it automatically in the future. We're constantly adding more, and exchanges are disappearing, today or a couple of days ago, KuCoin changed their API. So then all the API calls were broken for KuCoin. So we're actually interacting, we're reaching out to them and saying, hey, can we work with you to make sure the data keeps flowing? And then we have a manual template. So basically, worst comes to worst, a lot of people are trading on exchanges with bots that are basically like, they don't even make data. People had to write scripts to copy it into Excel themselves. And they just say, here, Zach, here's the ugliest data set that we have. And my team gets it into the right format. We get into a standardized format. And that's what we do. That's unique for us. People who are not really good at Excel Just give us your data in any format. We figure it out, get it in the right way, and then give you the gain loss report and let the system do its work. So yeah, I think basically we support every single exchange. You know, if you can find one we don't, we'll add it ASAP. So
I mean, that's definitely the good answer. And I can say from experience, I tried to do an Excel sheet like a year and a half ago to track things. And I found the only thing I could really manage was tracking like buy and sell price and like Bitcoin historical. But I could not, for the life of me, figure out how to translate that into a tax form. So, I mean, you're certainly doing a service that is extraordinarily difficult and very frustrating for people. So that's definitely awesome.
Yeah. And I mean, you know, a lot of people doing that themselves, and you could do FIFO, first in, first out, where you're tracking by dates, or LIFO. That's a little bit easier. But for me, you know, when I trade stocks, like in my stock account, my E-Trade account, if I've been buying Google shares every quarter for the past 5 years, just reinvesting dividends, when you go to sell some of them, you pick the tax lots and you sell the tax lots that minimize taxes, the ones that are a long-term gain that you paid the highest price for, basically. Sure. But, and so I do the same thing with crypto, but the exchanges don't let you pick tax lots. So we actually built it in Excel first, where we're, you know, we know exactly what your long-term capital gain rate is. If you make 40K, you live in New York City, whatever, and your short-term capital gain rate, we know your filing status, and we actually know which tax lots are the best for you as you're trading in real time. Like before you sell those Bitcoin, you can actually see in our system, if you have a 2019 account, here's what your tax liability will be if you make that trade. So you can actually pick before you trade, which is, you know, we want the exchanges to provide that. I don't know when they will. Our engine is ready to go into the exchanges and do that for them. I'd love to put TokenTax out of business because the exchanges are using our software to give such good tax records that it's just automatic import into into TurboTax. So,
well, I mean, realistically,
and
that's a good long-term vision. Realistically, usability is the most important thing. And if it's user-friendly and easy, hey, here's your, you know, whatever form it is, and take it to you can import it to TurboTax. I use TurboTax, so I mean, that's fantastic.
Yeah, you know, there are enough big problems to solve in the world. Like we don't need to make money just fixing people's data in Excel because the data outputs are so useless. Like I would love to, you know, automate everything we can and go do more interesting things. So, you know, we're not one of those like, oh, accounting lobby like wants to keep the tax code super complicated because, you know, we're just like, hey, put ourselves out of business because we built such a cool tool, and we'll go build other things. And, you know, we want to build the infrastructure between exchanges. We want to drop our API integrations. You know, like I said, we support 40 or whatever automatically. We'd love to just sell that to other startups so they don't have to reinvent the wheel. And, you know, there's so many other interesting things we can work on. But right now our bread and butter is obviously crypto taxes.
Yeah, for sure. And obviously you're doing that very well. So what would you say the most common misconceptions are about crypto taxes that you experience?
Great question. I think most common misconception, number one, crypto to crypto trades, people think they're not taxable events. You know, basically, if you sell crypto for anything, dollars, another crypto, a sandwich, a cup of coffee, if you pay someone to work on your website with crypto, all of those are taxable events. The only thing that's not taxable is when you buy crypto with dollars or with fiat. And so I think what a lot of people get messed up on is, well, I transferred Bitcoin to Binance and I just bought other crypto there. I bought altcoins. I haven't actually ever sold any crypto. And they don't understand that exchanging Bitcoin for an altcoin, that is a sale, you know? And so it's a lot of like, well, I never sold anything. I exchanged it. Oh, I traded it. And it's a lot of the nomenclature around, you know, what is a sale? But basically it's, you know, as the IRS says, a disposal. Number two is a lot of people file like-kind exchange, which, and we could get into that. I was very like, do your homework on it. It, you know, it generally applies to real assets. Like-kind is like, I traded crypto for crypto, so I'm going to defer my gain. And it, you know, traditionally it's used when you sell your house and buy another house, you defer the appreciation, you defer paying taxes on that gain. And so a lot of people think, oh, I filed like-kind. What that means is I don't have to put anything on my tax return. And no, if you file like-kind, you have to file a form 8832 saying, I traded one asset for another. Here's the deferred gain. A lot of people, for whatever reason, think, oh, like-kind means I don't have to report. And that's definitely not what it means. And I worry for people in that situation because they don't even realize they're making a mistake. And that's a pretty big mistake to be making. And, you know, especially with the issue with Coinbase, right? Your Coinbase tax report says all your withdrawals are taxable events. Now, that's not true because, hey, I transferred some Bitcoin from my Coinbase account to Binance and I traded it at Binance, that's why you have to report all your Binance trades too, because you're going to have to someday prove potentially to the IRS when they say, Coinbase told us you had a taxable event on this day. And you have to say, oh, actually that was a withdrawal, not a taxable event. It went to my wallet, or it went to my Ledger wallet. And so we're basically preparing that on the back end to like, hey, if Coinbase tells the IRS all this stuff, and then the IRS sends out a million letters to people saying, hey, you've underpaid your taxes, we're ready to give our customers the data they need to basically advocate for themselves and say, no, this is actually what happened. You know, these reports are incorrect. Like Coinbase put the burden on us to prove that they're not taxable events. And
I'm sure it's just easier for them to just kind of push it off and say, here, you figured out this is your responsibility.
Yeah. I mean, I wish I could tell you why. I mean, yeah, it feels like, you know, it's lawyers in the room saying, look, if we say everything's a taxable event, we can't get in trouble for anything. Then it's not tax advice. And then, you know, but to me, it's like, it's doing a bit of a disservice to the users. But, you know, I use Coinbase. I'm a big fan, and you know, I don't know. I just want better record keeping for the community, because like us undoing problematic records, I just feel like is a very inefficient use of our time. Oh yeah,
absolutely.
But yeah.
So how many countries or how many locations can you supply with this, or are you able to deal with?
Well, the beautiful thing is that gains and losses are pretty universal. So, you know, we don't file tax returns anywhere but the US, where we have CPAs, but calculating how much you made on an asset, that's a very universal thing. It's just that different accounting methods are in different places. So in the US, we have what's called specific lot accounting, specific shares accounting. Like when you're selling stock, you know, securities, bonds, you can track your tax lots, whether you're using FIFO, LIFO. Most people who don't know what I'm talking about, their brokerages automatically are using FIFO. That's just how it works, because, you know, first in, first out, it means you're selling the oldest one. So you're probably going to get a long-term capital gain, which is the key. And then in Canada and the UK, they use average cost accounting, which basically means add up all the Bitcoin you bought, add up all the dollars you spent on it, and divide the two. And that's your average cost every time you sell. So it's a very different account. I'd say those are the two different accounting worlds: specific shares and average costs. And so within specific shares are FIFO. So a lot of people say, oh, can I switch between FIFO and LIFO? And it's like, well, and it's not really switching. It's all specific shares accounting. So people get confused with like Walmart as a company tracking their inventory. They can't just switch from FIFO to LIFO because there are a lot of weird things they can do with their financial statements. They have to make a whole disclosure. So that's a common misconception there as well. But we basically support every country. We've got a lot of customers in Canada, the UK, some in Brazil where you have to report monthly, Spain, Germany, Australia. They run, you know, June to July. You know, the UK is really weird, where they run April 5th or April 6th to April 5th. And they have average cost, and they gave a lot of guidance around. So as you can imagine, tax loss harvesting is very difficult in a country like the UK, where let's say you bought 10 Bitcoin, you spent $100,000. Your average of all the Bitcoin you sold is $10,000. That's your cost basis. Now at the end of the year, if you buy a bunch, it retroactively changes your cost basis. So you can actually change your gains and losses retroactively at the end of the year. So you basically need software in order to figure out how to harvest tax losses correct and, you know, intelligently in these countries. And then the UK on top of that has all these rules about, they want to stop people from gaming that, because you can imagine there's a lot of things you can do. But yeah, we basically work in every country, but our top three are the US, the UK, and Canada.
I mean, that's awesome, because obviously, like you said, there's so many different variations in them. But being able to support countries other than the US is going to be a huge pro, because I feel like, I don't know, I'm just assuming that most of the websites or the things, kind of skills that are available right now are tailored more to the US market versus really kind of caring about anything else.
For sure. And I mean, the big reason why, and, you know, someone on my team, Devin, and it's been a team effort. We have like an encyclopedia of the tax rules all over the world for pretty much, I mean, almost every major country, because we're trying to build this knowledge because it's just useful to have. And as a software platform, eventually we could just build it automated for every country. But in the US, everyone has to file a tax return. You know, in the UK, companies file it for people. Like only maybe 10% of people in the UK even file a tax return, because you only have to file if you're self-employed. And then they have another thing where you only have to file if you've made over about $15,000 in capital gains. So most people who trade in crypto in the US didn't make that much. They wouldn't have to file if they're in the UK. So the US tax market is way bigger, which isn't a good, I mean, it's good for token tax, but it's not good as a US citizen. And looking at, 100 million of us have to file a tax return every year. I love the UK system where, hey, your company gives you what we call a W-2, and they just tell the IRS, they just tell their, the HMRC, they just tell their version of the IRS, this is how much so-and-so made. They do the taxes for them. So most people in the UK have no idea how to file a tax return because they've never had to. They're 60 years old and never had to file a tax return. And I think that's how it should be. We could definitely get there in the US, but for whatever reason, we've kept it complicated and everyone's still filing a tax return.
We've kept it complicated in the US? What, you kidding? Seriously?
Our tax return market is probably bigger than the rest of the world combined.
Yeah.
Sadly, but
so you kind of mentioned some of the differences, but I guess what are the major differences? Obviously, the UK files their tax returns. You said most of it's just like the way that they file it.
Yeah, like in the US, if you got a W-2 and that was it, you're very, you just work for whatever company, they give you a W-2. In the UK, your company would send that in to what they call HMRC, their version of the IRS, and they withhold all your taxes and you're just done. That's the form. You don't have to actually send in a 1040, whatever. And in the US, if you bought Bitcoin and you never sold any, but you use some to buy a coffee, your local coffee shop lets you pay in crypto. You're like, oh, I'm going to try this once. You buy a $5 coffee. Technically, the IRS says you have to report that because the only thing they've ever really said about crypto is in 2014, they said it's not a currency. So there's no de minimis exclusion where you can not report, something that's not a material actual transaction, like under $200. They said that's not the case. Every transaction has to be reported. So in the US, it's like you have to report, not only you have to report that you spent $5 on that coffee, you have to know what the price was, you have to track your tax lots and know what you paid and report the gain. Whereas in the UK, that wouldn't be the case until you have over $15,000 in gains, which makes sense. It means this person is like a pretty sophisticated investor. They actually make money, as opposed to like every single person has to report. And so now we have millions of people in the US who would love to do the right thing, have always paid their taxes, always try to do everything right, but they had no idea how to even file crypto. They tried their best, but it's and Canada's somewhere in the middle where, it's average cost accounting. Again, average cost is easier because you can do it in Excel on your own if you know the prices. The problem is crypto to crypto trades, you then have to have some price database to look up the price when you made that trade. It's easy while you're trading to dollars, but trying to do these taxes on your own without a software when you don't have a price database is extremely difficult and time consuming.
There's so much information that you need that you don't realize till after the fact, like the historical prices for things and whatever, that it's nearly impossible to do it alone. So you said you have like an encyclopedia of tax law. So how did you go about learning all these intricate laws for all over the world? And how many people did you have working on that?
Well, taxes are a pretty seasonal business. So we were insanely busy last tax season. A lot of people went on extension. We stayed busy over the summer, but when I taught at Teach for America, when I did Teach for America in New York, that was like 10 years ago now. Some of my students have grown up, studied accounting. We're here at Baruch or other schools in New York City. And I was like, hey, do you guys want to be a part-time crypto tax intern, whatever? So, we started a program for accounting students, some people getting their masters who just, whatever, they want to see what it's like to work at a WeWork and work at a tech startup. And some of those kids adult, they were so amazing at their job and they just ran through walls. They made customers super happy. They're brilliant, amazing at Excel. And then they got full-time offers from TokenTax. And that's how we built our team. We have 13 people, very organic. But yeah, it was a team effort of, I put in a ton of time over the summer just digesting these tax laws. And we have customers in many countries. And then we coordinate with their CPA. So, not trying to reinvent the wheel. It's like, oh, we have someone from Sweden who needs our help. We help him make the tax form. We talk to his accountant. He gives us the download. We put it in this document. And now we have it for anyone who, doesn't have an accountant in those countries. So it's growing over time. And the thing is, every country is also issuing new guidance here and there. Like the US totally redid a lot of things in 2018. The UK just issued new rules in a month. And yeah, shout out to Devin on our team. He's one of our new full-time employees. He's keeping track of this across many countries.
That's remarkable.
Yeah, it's the good thing is we don't know all the tax codes for every country, but we do at least understand gains and losses and mining income and like being paid in crypto and how that works.
So the important stuff, basically.
Yeah, for crypto. Like
Yeah.
that's a small slice of it. You know, understanding the whole tax code for every country, that's just, it would be impossible.
Oh, yeah. No, I'd imagine it must be. So I got a super chat, somebody asking, I lost money last year. What do I do about taxes? It's kind of broad.
Cool. But I mean, here's a magical thing about crypto investing that one thing people don't realize. Look, a lot of people had bad timing. They bought in at the beginning of 2018 or the end of 2017, like just when there was that spike. Like had you bought in any other time over the past 8 years, like you would have made money. But so many people bought in right at the top. And now the good thing is, let's say you lost $5,000 trading crypto. Well, you can actually get half of that money back from the IRS. Basically, you can offset your ordinary income up to $3,000 per year, and any additional loss rolls forward. You just need to fill it out the right way in your tax return. So you tell the IRS, I'm using up this much capital loss, blocking ordinary income. So let's say, you have your job, you're a teacher, you make 50K a year. Now, if you lost 5K in crypto, your AGI, or your income that you pay tax on, goes down to 47,000. So it's basically like if your tax rate's 40%, your marginal tax rate, the taxes you're paying on every extra dollar, you basically get 40% of that 3,000 back from the IRS. You get $1,200 back in your pocket, and then the rest rolls forward. And also, if you have capital gains on stocks, on anything, on a home, those losses from crypto offset those gains. And that's why it's so important and so worth it. And like we pay, like our whole thing at TokenTax is, we let you track your specific shares accounting. Like that alone in real time pays for itself. Mm-hmm. We also help you get money back on your tax. Our whole thing is like, we want to make people more money than they pay us. Like we want to create value for them, because then we'll always have infinite customers. Yeah. We don't want to be like a sap on them, a drain on them. And this is one of the biggest ways. Like people don't realize that you can get a lot of the money you lost back on investing in crypto by just realizing the losses and then reporting it correctly. And this is the other big thing. You have to realize losses in the US. Some countries at the end of the year, you do like the market value. Did it go down? In the US, if you bought whatever crappy coin and you put $20,000 into some ICO and it went down 99%, well, you're not going to get that money back from the IRS until you sell it.
Yeah.
You have to realize it. This is a very common misconception. But then they're like, there's no liquidity. Nobody wants to buy it. So, there's an organization called Docens that a friend of mine, Henry, was starting. And basically, like, the idea was sell these coins to Docens, and Docens, eventually they'll hold them. If they ever become anything, they'll use those profits to support financial literacy. But, it's something that we're both really passionate about. But, we're just trying to find a way to be useful for our customers, like to realize that loss, because you can't just sell it to your brother. You have to make sure you actually give up control and sell it to someone. But a lot of these assets aren't even traded anymore. Mm-hmm. So, you can write it off as a worthless security. But the key is you need to realize that loss before you can actually get anything for it on your taxes.
It's like two things. People don't realize that they need to sell it in order to state that they lost it. And then also people think that, crypto to crypto is not a taxable. Those are the common things that I would see from people, is that it's just, like you said, misnomers, words that aren't used correctly that give people the wrong idea. And it's unfortunate, but it's just a lot of people who don't understand tax law talking about tax law, and it gets confusing.
Well, and then you have people, on Twitter who are accountants, like CPAs, lawyers, on famous podcasts talking about crypto tax, saying stuff like, hey, wash sale rules don't apply in crypto. And it's like, all right, yes, the IRS hasn't said that wash sale rules apply. For those of you who don't know what wash sales are, it's like if you're trading those Google shares, if you sell them at a loss and you buy it back within 30 days, the IRS says that's a wash. That sale didn't happen. You can't take that loss. Basically, it's to stop people from harvesting losses and immediately buying back. Like, all right, I bought a Bitcoin for 10,000 and went down to 3,000. I sell it and immediately buy it back. If wash sale rules apply, like in stocks, that wouldn't be allowed. And so, but then I see people on Twitter saying that, who I really think should know better. And, then somebody who doesn't know any better is like, oh yeah, wash sales. And for us, in the absence of actual guidance from the IRS, we're preaching use common sense. So if it seems too good to be true, the way it works with wash sales is you just have to wait 30 days. So at the end of the year, hedge funds and, like I said, wealthy investors, they sell stocks that they're down on in December to harvest the losses, and they wait 30 days. And if they want to buy back into the position, they do that. You can do the same thing in crypto, and then you're safe, even if the IRS says wash sale rules do apply. And again, I don't know. It'd be great if they don't apply, right? But just ask yourself, does it pass the smell test in our opinion? Because we're kind of writing a lot of these rules and we're just saying, use common sense, be conservative, be consistent with the way you treat things. And I feel bad for the community because you have people out there, you're hearing different things. Oh yeah, like kind rules definitely apply. And for us, we're like, look into it a little bit, do your homework, understand the IRS might say no, and you might get penalized, tell the IRS that you're not sure. This is why you're saying you believe it's a strong case. I'm not saying don't do it. I'm saying do things with your eyes open. And same with watch sales. If you want to do it and take your chances, sure. But why not just think about, hey, sell your ETH, buy another crypto that's correlated to that ETH, which is allowed, hold that for 30 days, and then buy back into the ETH if you want. That's what people do in stocks too. It's like, oh, I sell my Apple shares, I buy Amazon, which is pretty similar, hold that for 30 days, and then sell the Amazon, buy back into Apple. Now I'm safe from wash sale rules. And you could go way down the rabbit hole of what you can do, but there are better ways, I think, than just assuming because the IRS hasn't said anything, it's free run on whatever you want to do. Just use common sense, basically. And but it's hard when you see crypto experts saying stuff like that, in my opinion.
Well, yeah. I mean, how are people really supposed to differentiate between who's right and who's wrong when they don't know and they're going to these people for help in the first place? I mean, that's the whole idea behind it.
And that's why I'm so thankful that you had me on today. And we're just trying to spread, public service announcement. That's why we answer everyone's questions on our intercom. And, I wish I had more time to blog and write this stuff, but we're just preaching common sense in the absence of guidance and just pleading with the IRS to give us guidance. Like we published an article on CoinDesk. We were fortunate enough to be selected to be on the tax day article. And it was basically an open letter to the IRS and treat crypto as a new asset class. Let's have some common sense regulation around, hey, if you've never cashed any dollars out, maybe you should be able to defer your gains until that, right now they haven't said anything. That's not the rules. So you got to go with the rules as we understand them.
Sure.
But I really, really hope that congressmen and people are pushing for common sense regulation because crypto really is, it's similar to securities in many ways, but it is its own animal in other ways, forks, like airdrops. There's a lot of things that the IRS should really weigh in on, and they haven't yet. And I mean, I understand they're totally overstretched. They just got shut down for 35 days. It's not like a blame game. It's just it would be great for everyone, and it would get rid of a lot of uncertainty and help everyone. And eventually, they will weigh in. And the community in the meantime is just trying to make common sense rules that they can hopefully leverage when the IRS does speak.
Yeah, and I hope that comes sooner rather than later. Because it's definitely stressful for everyone and everybody involved. So as far as getting into the good stuff, we did kind of already touch on what crypto trades are taxable. So you had mentioned selling for fiat, paying someone in crypto, buying something with crypto, and then crypto to crypto trades. Is that right?
Yeah. And spending crypto. Basically, the easy way to remember it is if you ever got rid of your crypto and turned it into something else, that's a taxable event. Okay. So the only time it's not a taxable event is when you use dollars to buy crypto. I mean, think about it like stocks too. When you buy Apple stock, if you guys know, you don't have to report that. You don't report anything until you sell the Apple shares. And it's the same thing for crypto. But where people get messed up is they think crypto to crypto. They don't realize that's a sale and a buy. It's two halves
instead
of a
trade. Yeah.
Yeah, they think, oh, that's just a buy of ZRX with Bitcoin. It's like, well, it's a sell of Bitcoin, a buy of ZRX. And I do get it can be mind bending, but and then the big airdrops, forks, like, are those taxable events? Be consistent. If you're going to report income on some, don't do income on some and then not do income on others. Most people are saying, all right, Bitcoincash, I'm going to pay the full taxes and take a zero cost basis when I sell it. At the end of the day, like I said, common sense dictates if you don't have really good records, and like Coinbase, most people had their Bitcoin on Coinbase. Coinbase specifically said they're not supporting the Bitcoincash fork. Then all of a sudden and it happened in August. Then in December, all of a sudden people just find a bunch of Bitcoin Cash in their wallet that got dropped in there. And it's like, when is the taxable event for those people? In August, when they thought they were never going to get something? In December, when it had like a crazy high price because Coinbase just didn't tell anyone and dropped it in there. And then there were like people trading early. And it's so in the interest of consistency and ease, it's kind of like, all right, well, when you sell that Bitcoin Cash, just take a zero cost basis, pay a full gain on it. as long as the IRS gets their share, I think they should be happy.
Yeah.
And then you don't have to track every other fork that you didn't even know about. Then, if you're reporting income on Bitcoin Cash, you got to do it on Bitcoin Gold, Bitcoin Private, whatever. And that's the other thing, is like just trying to be consistent is the kind of the best thing you can do, in my opinion.
Oh, for sure.
So,
and it's easier, it's easier as far as peace of mind for yourself, being consistent and gauging how you're going to handle things. So it's just overall a little bit less bumpy of a ride trying to resolve your taxes at the end of the year.
Yeah. And I think, crypto has a bad reputation in some sort of people who don't understand, but it's like almost everyone that I have interacted with is a good actor trying to do their best to pay their fair share, super stressed out, trying to get help. And, there's a lot of predatory stuff going on, people paying $15,000 for a tax return and then turning around and they outsource it or whatever. It's just like, we're just trying to see, or, $10,000 for an opinion letter that like-kind exchange is allowed. And, we're just trying to help people be good actors in an affordable way. And, again, like especially margin trading, missing data, when you have to have an accountant synthetically recreate your trades because you've lost the data from Mt. Gox or from Cryptopia, that just takes time, and we have to pay the team. And, it's tough when we hear people say, oh, it's too expensive. We're trying to make, we'd love to just give everything away for super cheap. And maybe someday when the exchanges provide really good data, we will be, and it'll just be like $10. You upload all your data, it makes the form, imports directly. I really look forward to that world when we all have super easy tax reporting. And, so we're just out there. We're a bootstrap startup at TokenTax. All the money we've made, we've just poured into hiring new people on the team. And so we're working super hard for the community, and we love what we do. So, please check us out.
Yeah. And for the record, all the links for everything, if you're interested in checking out the website, will be down below. So take a peep when you get a second. So as far
Sorry
as
for the promotion.
No, it's good. I mean, that's what you're on here for, right? We want to talk about the platform and why it's useful. So, as far as you'd mentioned margin trading, so as far as taxable events on that, how does that, because you said it's more difficult, so how does that play into everything?
Yeah. And, with stocks, it's not more difficult because, E-Trade and IAB, and, they track it for you and they tell you, okay, this person went short. They shorted. So as in they sold, the date sold will be before the date acquired, and they track the cost basis. It's all done for you. And for that reason, people who trade on margin a lot in stocks expect something similar in crypto. And unfortunately, the exchanges, the data is just not useful. And many times they won't show you how a position was closed out, especially people who have multiple margin positions at once, Poloniex margin, Kraken margin, BitMEX margin. They all have to be treated a special way because the data can be incomplete, and it depends on what your collateral was. So if you put up ETH as collateral, sometimes that was getting converted in the background if you got stopped out. And basically, to take a step back, margin is like you put up some crypto as collateral, and it lets you make bigger positions. Like if you put up $100, you can make a $150 bet. But the thing is, this is why margin takes us so long. We have our automated platform. It's like $19 or $199. And then our higher level Pro and VIP, which are like, just take all my data and do it for me and file my taxes. Or margin, unfortunately, we need to sit down with people and say, all right, in January 2018, I see all these trades. What was happening? You put up Stellar as collateral. You went long Bitcoin, short Ethereum. Because what's happening in the data is it shows that they sold a bunch of Ethereum they never owned.
Yeah.
And so now we have to figure out, when was that position closed out? When did you buy the Ethereum to close that position out? And we've automated as much of it as we can. But, as far as I know, there are no tools out there that even come close to what we do. But a lot of it still has to be manually understood. Hey, what were you doing in February? Were you going short this, long that, so that we can make sure to report it correctly? Because you can't just say like, oh, it's margin data, I'm going to just say I went short on a bunch of stuff, because then you're reporting things wrong to the IRS. Like, you have to make sure it's the right trades that you went short on. And that's why it's so difficult. I mean, a lot of people who we know who trade in margin had such a difficult time with the data and records that they're just like, it's not even worth it to trade margin just because the reporting is so difficult. So any exchange out there who wants to have better reporting, that's how you'll get a lot of these margin whales back on the platform.
Yeah.
I know Poloniex shut down margin in the US. I don't know if this is why, or partially why, but we had dozens of customers with Poloniex margin data issues. And it's so frustrating because we spend so much time working with them and still the data is not showing us everything we need. And so basically though, margin, if you were going short and you ran out of tax lots and it looked like you sold stuff you never had, that has to be handled in a particular way to make sure that the rest of your gain and loss report doesn't look suspicious to the IRS.
Sure.
And that's the whole thing, basically.
Yeah, I actually, maybe about a year ago, I tried to export the whole Excel file from when I used to margin trade, which was a nightmare, to try to gauge like what my overall gain and loss was. Yeah. And just like you said, it's like, okay, well now I'm negative like 17, whatever. How did that happen? Very, very confusing thing to try to figure out.
Yeah. And sometimes it's not it's like, oh, I lost 11 Bitcoin on that margin trade, but Bitcoin went up so much during that period, you actually had a dollar gain. Like there's another variable lurking in there, which also makes it even more difficult. And that's if we had all the data from the exchanges. And the problem is sometimes it's not clear what's happening, especially when the collateral got converted in the background and things like that happened. And sometimes you need to make summary entries, but I would say, 80% of our most difficult cases are margin clients. So anyone out there wondering why we charge so much, I feel bad doing it, but it just takes up so much of our accountant's time. And, 1 in 2 times, 1 in 3 times, we're going way down the rabbit hole.
Yeah.
And it's just, we just want to make better data with the exchanges. And then bam, this all goes away forever.
Yeah. In a perfect world, right?
Yeah. In a perfect world. Exactly. And it doesn't seem like it would be that hard. The stock brokerages already have it. So, and I get it. It's more complicated when you're going crypto to crypto, but we know how it can be done in an exchange. So hopefully someone sees this and reaches out.
Give you a call, right?
Yeah, for sure.
So there's 3 options that for organizing your trades on the website. I saw FIFO, LIFO, and minimization. We kind of talked about FIFO and LIFO first. So I was kind of playing around with them and I saw my tax number change, like what was taxable now. So I was kind of curious about the differences and how that works.
Yeah. And I mean, and the gist of TokenTax is that it's kind of like TurboTax in that you buy a subscription each year, but you can buy a 2019 subscription and track your tax lots in real time. This is like, how are you tracking your tax lot? The exchange isn't letting you pick which ones you're selling. But like for me personally, as I said, years ago, I knew that, all right, I bought old Bitcoin or whatever, but that's not the Bitcoin I'm transferring to Binance, so I have to keep that separate, because with FIFO, it's like, all right, you bought Bitcoin in 2014, 2015 for a really low price. Now in 2017, you bought some fresh Bitcoin, transferred it to Binance. You're trading crypto to crypto there. Like actually LIFO is more representative of what's happening with your data, and so basically it's like just giving people the functionality to track that in real time. And what minimization is, just a branding, but basically it's something that I had built in Excel where it's like, I know that with my income, my filing status in New York, being, a single guy, whatever, I pay this. My short-term capital gain rate is 40% and my long-term capital gain rate is 20%. So if I'm looking at my tax lots before I make a trade, all right, I'm going to always sell the one that minimizes taxes. And I'm going to prioritize long-term gains because they're at a lower rate. So basically, this is hard to explain to people. And, obviously tax law tracking. So, we branded it as minimization, but it's basically like, if you're a really savvy investor, if you're a hedge fund, if you have a wealth manager at UBS managing your stock portfolio, your crypto portfolio, this is exactly what they're doing for you. And so the whole idea is like the personal finance piece of TokenTax is like showing people what that even means. And again, even CPAs and accountants, even for them, this stuff is like a very, very niche area. Like you needed to be an investor who's tracking your own tax lots even to understand it. And tax loss harvesting is another thing. So, if you're a hedge fund, you bought 10 stocks during the year, the way it works is the stocks perform and the ones that go down often go down further in December because everyone does tax loss harvesting. Like, oh, all right, I bought 9 stocks. 2 of them went down during the year. And let's say NVIDIA and AMD. So you see the selling compound on that. That's because all the hedge funds and private, investors are selling them, harvesting losses, and then they usually pop back up sometime in January when people buy them back. But in crypto, it's a lot more complicated because, if you hold ZRX and all of it is held at a loss, well, then it's not that hard. You just sell it all, realize your loss. But what if you bought Bitcoin 1,000 different times? You hold some Bitcoin at a gain, some Bitcoin at a loss. A typical portfolio tracker will be like, all right, you hold 10 Bitcoin, you paid $20,000 for it. So, your total gain, you have an unrealized gain of whatever, but actually what we built is a tax loss harvesting dashboard that bifurcates that into an unrealized gain set and an unrealized loss set. So it's like, oh, actually 8 of your Bitcoin, you hold at a huge unrealized gain. Leave those alone. You hold 2 of them at a really big unrealized loss. So actually just sell those 2 Bitcoin, and you need specific shares accounting to do that. I see people on, again, crypto tax experts being like, and FIFO and, FIFO and tax loss harvesting. And it's like, no, you need to track tax lots to do that. And so basically, like I said, it's personal finance is a huge passion of mine. So that's why we were doing that for customers, for our VIP customers. We were making them tax loss harvesting dashboards in Excel. And then our engineers saw that. Alex, my co-founder, he's like, that's amazing. We should build a dashboard and give that to everyone on the site, no matter what package they have. And so they did that. They built it in a few weeks, and we had a tax loss harvesting dashboard. And you can go and, it shows you exactly what you hold all of your crypto at, split into unrealized gains and unrealized losses. And a lot of people think, oh, I missed my chance to harvest losses because I didn't do it before the end of the year. And crypto prices have been flat. And like I said, you can only take a $3,000 loss per year. So a lot of people, there's still time. Harvest your losses, buy a correlated asset, and then wait 30 days. And if you want to re-enter the position, do it then. So tax loss harvesting, typically it's done at the end of the year. But with crypto, especially if you're way down and you already had enough losses, there's still time to do it. And so that's where the specific shares accounting and the accounting methods are really important. And again, like, no, not to call out the other platforms, but they're pretty much built by software engineers who built really cool tools for tracking, but it doesn't have the level of tax rigor that they needed to be on. And, I was using them too, and know the founders, they're awesome people, have built cool tools. We're just trying to have a tool built by accountants for tax specifically, and, and just make a useful tool for the community, because I don't want people getting audited and finding out they owed money to the IRS and they tried their best to file. So that's basically why we built this tool and what we're doing, fixing data and all that, answering questions.
Well, I like that you're building a tool that, like you said, tracking, but also specifically for tax, because as you stated, I don't necessarily know. I haven't had any experience with really the other platforms, so I'm not really sure. But if you're saying they were mostly built by, developers more so than tax related,
insanely talented developers, it's like, wow, one guy built that. It's amazing. But it's tax is such a complicated animal that there's plenty of, like, a lot of our customers have a tracking platform and they use us for taxes. And I think that's really smart. And that our whole thing is like, look, we're just trying to create enough value that you use us no matter what. And yeah, we're adding tracking functionality, but we're also not trying to reinvent the wheel. If you love your whatever blockfolio, use other tools. Like we're not trying to take over the world in that. We're just trying to have the best crypto tax tool and the best crypto tax advice. And yeah, that's our first mission.
So my next question, you said you deal with also like mining rewards. So can you input like a regular Bitcoin wallet that maybe somebody donated to or something, and you have to just track like when you got it, what the price was, and what you'd owe on just that, even though it wasn't a purchase at the end of the year?
Exactly. So many people who made their money getting crypto given to them. It's kind of like mining. It's like, all right, all you have to do is give us your wallet address and tell us, hey, these weren't deposits, it was income, and our system does the rest. It looks up the prices, doesn't matter the crypto. That makes your cost basis. We give you a report that goes on your Schedule C if you're filing for yourself. That's like not a gain and loss. That's like self-employment income. And then that creates the cost basis. So let's say you made $10,000 in these, contributions that people gave you or whatever, you kind of like earnings. And then when you sold the crypto, that $10,000 creates the cost basis, but you could have had a gain or a loss depending on when you hold it. That's like 2 separate parts of the tax return. And we, that's all included in your package. It's not like add-on fees for that. It's, we do the mining income, or if someone's paying you in crypto, a lot of people get paid in whatever random crypto that's hard to know the price. And, they get paid every 2 weeks, but it's like, that means they have to look up 26 prices during the year. They have to do, and our software just does that for you. Basically, you just upload your data or give us a wallet address and we import it directly. We have our price database, which has basically every crypto's price all the way back to the beginning of whenever it launched for more than 5,000 crypto currencies. And yeah, it converts everything into dollars. It gives you this really easy type it into TurboTax, give it to your CPA, or have us file it for you, output.
Well, that's extremely useful. I mean, outside of being able to import from APIs from exchanges, I think a lot of people struggled with swapping crypto with friends or getting donations or whatever. So that's a huge component of this space for sure.
Yeah, I mean, so many of our complicated cases last year, it's like, oh yeah, 4 friends put ETH into a wallet, invested into a bunch of ICOs together, and now their taxes are a nightmare. And yeah, it's unraveling that.
Yeah.
I would call them good friends now. I spent so much time talking to them about what happened, exactly who owned what stake of what, and that's exactly what we love, those puzzles, unraveling that and getting you back on a solid foundation going forward, so that the record keeping in the future is super easy.
Sure.
Like, let's just be smart about it and set ourselves up so this is automated in the future. Like, what's done is done. We'll unravel it with you. It's going to be a process. But yeah, that's very common. Gifts are really misunderstood. And a lot of people were just like, oh, I can't open a Binance account. Can you buy me some whatever on Binance? And those situations just result in a lot of missing cost basis. It just looks like, oh, your friend gave you some Bitcoin to buy stuff on Binance for him. Now you upload all your data from the exchanges, and the people forget that someone had given them a Bitcoin to spend. And now it's like, well, somehow the system says you've sold one more Bitcoin than you ever bought. And they're like, that's not possible. And then we have a whole wizard that's like, did you do this? Did you do that? Did someone give you crypto? And it's like, oh, okay. So we're trying to automate that. But that's also what the team is doing on Intercom, of just like, we've got our saved replies and all that. So.
That's good. So I got some community questions. I got 3 of them. So do you think the IRS is going to start targeting people who don't claim their crypto?
Yeah, I'm sure they would. Yeah. Like,
my opinion, I think, is probably,
why would they not?
It's going to start with people like me, because obviously I'm in the space. I'm very out there talking about it. They're going to assume that I'm getting it, which is why I filed my taxes and I claimed it this year, because I was like, well, I don't really want to mess around. So at some point, I'd imagine they're going to get a bit more savvy at figuring out who has it, who doesn't, and who's paid taxes on it.
Yeah, for sure. And I think they're going to try to do it in an automated way. It's like I said, with that 1098T example, every university sends a tax document to all the students, and they send one to the IRS. Coinbase just did that. They sent a 1099K. So, the IRS is going to send out, like, everybody who has a Coinbase account is probably going to get a letter that says, hey, you owe $311. And then it's not going to be like you're in trouble. It's just going to be, you owe money plus interest, or you have to prove why you don't. And I think that's what's going to happen. But yeah, the IRS, like I said, I think they said they're going to hire 250 new people who just go after cryptocurrency. And I think, first they're going to go after public figures, and it's just going to be a hierarchical thing. Like, the exchanges are reporting that data. Like, why would any exchange they're making a ton of money. Why would they want to die on a hill of, oh, we're not going to hand our data over to the IRS?
Yeah.
That just seems irrational to me to count on that. So of course the IRS is going to look into it, and they work with some startup that scans the blockchain. It's like, crypto is more traceable than cash. So I don't understand this idea that people have of like, oh, you never have to pay your taxes because they'll never know. Because I think it's in fact the opposite. And but I agree. And hopefully they're smart, and if you tried your best to report your taxes and you made some mistakes or whatever, but you like hired a professional, you gave all your data, some data was missing, I feel like they're going to be looking at that way more favorably than someone that just like never reported anything.
Absolutely.
So, do your best effort. Like, it's really hard to get it perfect, especially if you've been investing and doing this for 5 years, 6 years, but make your best effort. And just hope that it's sensible people looking at it from the IRS. And if you've reported nothing, it's like, of course, that's the people they're going to go after first. Okay, Coinbase told us you had crypto. We've never seen anything on your tax return. What's going on? Yeah. Like, I think they're just going to go down the list in that way, whoever's account was the biggest, and go from there. The crazy thing is, crypto shot up so much in 2017. People had enormous gains. Then they lost a lot of money in 2018. What's disastrous is like people who made 500K in 2017. They started with $10,000, turned it into 500K, traded. So they owe taxes. They owe like half of it because it's all short-term gains. They owe $250,000. By the time they figured out their taxes, they held their crypto as it crashed. They lost 90%. Now they have 50K today. They owe 250K, and losses don't carry back. So those people I think I have the most sympathy for, and it's really a sad situation. And it's kind of like, well, one, just figure it out, get the data right so you at least understand. And then you can work with the IRS. You can have our CPA interact with the IRS for you and try to get amnesty, try to get some of it forgiven, try to get on a payment plan, because, you know, especially people that never, cashed out into USD. And these are some of the people where it's like filing like-kind exchange kind of makes sense, because even if the IRS says no to that treatment, you don't have the money to pay it anyway. So you're going to have to negotiate. And that, you know, that's what's kind of crazy with the timing. It's arbitrary because it's calendar year, but it just peaked right at the end of 2017. So it really caught up a lot of people in that hurricane of like huge gains, massive losses. You don't have money to pay the gains and you can't carry it back, which is just kind of a flaw in our tax system, I guess, but the rules are the rules.
Yeah, that's definitely not an ideal situation.
Yeah.
So we've got another guy who says that I'm in the UK. I own crypto assets via Coinbase and Binance. So I understand that I'm liable to pay tax in the UK only if I cash out. Is that the case?
No. You pay same as the US, taxable events. Whatever you bought on Coinbase and then sent to Binance. Now, there was no way to buy with fiat on Binance, right? So anyone who tells me that they've never sold anything, but they have a Binance account where they've made trades, it means that they need to understand it's two halves of a trade. You did have sales and you do need to report those to the HMRC. And, you know, our software does it automatically, but basically Coinbase and Binance is pretty basic. You just upload the data. It will do the average cost. So if you sold 3 Bitcoin and you bought 10 Bitcoin during the period, we just figure out, all right, you paid 1,000 each for the Bitcoin. So for the 3 you sold, the average cost is, 1,000 for each. Your proceeds are what they are. And the UK has rules around bed and breakfasting, as they call it, which are basically wash sales. So if you harvest a loss and you did it again within 30, there's all these complicated rules that, that we help you figure out on your own. Help you figure out automatically. But yes, you do need to report. But the one thing I will say is you only need to report if your gains are in excess of 11,300 pounds, which is that amazing thing with the HMRC where not everybody has to report. It's only if you made over a certain threshold. So if you're under that, you're totally safe, which is honestly just so much of a better system than in the US.
Absolutely.
Everything has to be reported. And the thing in the UK too is you have 4 years to report your losses. So if you lost money, you actually do want to report it, because someday when you make money in stocks or on your home or whatever, those losses can be used. So you have 4 years to report them. So you don't have to even, if you lost money, you can figure it out now, get your tax forms, but you don't even have to tell them for a couple of years. Wait, hopefully crypto bounces back this year, and then you have some gains and you could use those losses from previous year to offset it. And again, like I said, every country is different, but the UK is actually pretty progressive in terms of giving guidance, helping people out, and super progressive in terms of they're trying not to be a burden and force everyone to file. It's only people who have material gains who have to file crypto. And yeah, happy to help people figure that out.
I like that cap of, whatever it is, 11,000 pounds, and underneath that not needing to file. So that's really amazing, because that would save so many people that are in the space in the US now. That's like such a huge subset of people, I think.
Yeah. So any Congress people out there, please.
Please get a move on.
Include that in a law. Yeah, it's not going to be good for TurboTax or for us or for accountants, but it's like we'll find other things to do. It'll be all right. But yeah, it's just so crazy that you buy one coffee with a Bitcoin for $5 and you have to file an 8949 and the Schedule D and upgrade to a higher package of your tax software, and there's a better system, and it's right there over in the UK. So we should take a look and learn from them.
Absolutely. So my final question for you, which is another community submission, is shouldn't crypto be considered an investment and just fall under the corporate capital gains and losses? I think it's like more of an opinion question than fact.
Yeah. And it is. And, the tax code is super Byzantine and super complicated, but long story short, it's property. There are many types of property, including securities, which are stocks, bonds specifically, and those have specific rules. And, from my perspective, Commonsense, the SEC, the Securities and Exchange Commission, they keep saying, look, all these ICOs were securities. A lot of these cryptocurrencies were securities. The G8 met in Buenos Aires, earlier this year or last year, and they said, look, we're coming to a consensus. Like, cryptocurrencies are a lot like securities. So just for us, in the absence of the IRS saying how it should be treated, we're kind of like, look, if it looks like a security, seems like a security, trades like a security. Let's just assume securities
Yeah.
rules apply and assume wash sales apply, stuff like that. It's like, just use common sense. And then there's things like, all right, well, Bitcoin and ETH, those are often being used to trade between other coins. So maybe, that's a little different than stocks with wash sales. And I totally get it. There's a lot of gray area. There's a lot of nuance. But, to that question, yeah, absolutely. They do fall under capital gains and losses. The part that doesn't fall under capital gains and losses is when you're getting paid in crypto or mining crypto or you're performing or whatever, and people are donating crypto. That's ordinary income. And I think that's pretty clear. What's unclear is more like staking, Tezo staking. Is that passive income or ordinary income? And sorry to that's a little preview of like the next 4 hours we could spend talking about this, but no, I know it's enough taxes for one night. But yeah, any specific questions, and I know everyone's situation is different. They bought in this SAFT or this ICO, please just come talk to us, TokenTax.co. We're there to answer your questions, and we love nerding out about taxes. The next couple months are going to be rough, but especially the rest of the year, we have plenty of time to just chat with anyone who loves discussing these interesting tax questions. Come find us.
Cool.
And thanks so much for having me.
Yeah, no problem. I mean, you're promoting the website, and also I forgot I have a referral link under my account. So if anybody wants to sign up through me. But yeah, so thank you for coming on. Do you have anything else you'd like to add before you go?
And if any of your users send you questions or anything, please just forward them along, and I'll reply, because and like, even if you're a customer or not, we're answering your questions. It's not like you have to pay us to get the gatekeeper. We want to do stuff like this to tell people about our site and promote our site, of course, and promote our business, but also just to give people the information. Even if you're going to file on your own or whatever you're going to do, I want to make sure everyone does it as correctly as they can.
Absolutely.
So yeah, thanks again.
Thanks for coming on, and good luck this year.
Thank you.